That's a great question. I get it all the time. Am I seeing or researching how blockchain and crypto can be applied to basically tools for crowdfunding, tools for regulating securities? And the simple answer is yeah, all the time. Like the tech side is actually the easy piece of it. The hard piece everybody's been trying to track is the security side that has so many regulations on transfer rules, how long you have to hold securities under different exemptions. Uh, but here's how it kind of rolls out. Like if somebody created some tech that, let's just call it applied existing blockchain tech to make a record and a ledger of what people own, and NFT tech is used to basically apply the uniqueness of that particular security, from any company. And then you have blockchain identity tech to initially onboard shareholders, to basically validate they are a real person across any one of those securities that they own. And that identity would also help validate like U.S. based or international anti money laundering and KYC requirements. Knowing your customer, then yes. And I think a lot of people are working on that. Like, I think Republic Note to some degree is based on that. StartEngine has a secondaries offering where they're tracking things in this way. And there's various parties out there that are applying it within their ecosystem. There's even players that I've heard like Equity Shift that are, I believe it's Equity Shift, that's looking at trying to create like kind of an application layer so that any security across any company could be layered into that application layer. Then that could also be used for, say, a StartEngine or a Micro Ventures or a Republic or Wefunder, or, whomever, AngelList, Carta, to basically use that. I think the challenge right now is market adoption. There's a lot of individual players building that tech and wanting to apply it, but their business models right now are not to share investor data or share what they know about securities that they've raised or have been raised on their platforms or within their ecosystems. Is to keep it within the ecosystem. So at some point in time, it probably will make sense to, somebody will do it. Somebody will push, and you'll see two parties probably come together and say, we should partner together. We'll keep the investor data anonymous, but we'll form some standard between us that allows the millions of people we have on our platforms, millions of investors, which probably overlap, to be able to share data about the securities they own, so they can also trade or sell their securities with other people when it makes sense. The large effort is making sure that when a founder is raising capital, that data is stored in a way that allows us to do all the things that blockchain is really good at, which is automate the process. There's no standard across the board right now for people to do that. Giving an example, that's the reason why the adoption rate for this has been so slow. But to give an example, StartEngine, for example, basically requires all their founders to raise on common stock. Well, that makes it really easy to form a standard if we're talking about it within a blockchain type situation, to be able to trade securities on a secondary. And guess what? They have a secondary set up. They're not the only ones, but that's just a example of how somebody's trying to standardize it across the board, which they also say makes it easier to IPO later. So I expect this adoption will take place. I'm trying to think of what the market incentive is for those various players who have millions of investors on their platforms now, both accredited and non-accredited, to make it worth their time to go away from their already lucrative models of charging founders raise capital from the crowd, success fees, or in the case of like an AngelList, charging basically carried interest and getting carried interest to do this. There's not a huge incentive to share that data right now, or make it shared anonymously so that, again, the secondary could occur across the board. So that's my knowledge of it. I'm sure there are far more people that are way deeper into this than I am. And so I'm really curious to see what other people are working on in the space, but kind of where I see it heading is there will be a tipping point where it makes a ton of sense, especially as we see IPOs from VC-backed companies just falling off a cliff. I mean, they're at the worst level since 2008. That's going to push the desire for more secondaries, which builds market demand for, man, it'd be great if I could get access to XYZ company, or it'd be great if I could free up some cash flow from, securities I already own in this particular company. That's what's going to drive kind of the adoption across the board. So hit me up, DM me if you've got any questions. Happy to chat.